Hey, everybody. Welcome. And it's going to be another interesting day. I'm wearing the Hope t-shirt thanks to Charlie Maloof at Ashley Furniture and Home Centers. So thank you for sending that, and the One Word Brands guys who did that. And so ironically, I'm wearing Hope because I'm hopeful that we'll still actually get Congress to do something. That's the optimist in me. But then we did not plan this, but Adam is wearing a pink button-down shirt. He's trying to look like old school accounting firm today. He's in our Myrtle Beach office. And then we've got Jack, who's wearing his Under Armour jacket, and he wanted to know why Adam was all dressed up today. So, Adam can talk about that more. We actually will have some things to talk about, I think, with all this, rancor. Are they butting heads and locking horns? Or are they actually going to give a flower to one another and say, let there be peace on earth? I don't know. So, Adam, while we've got you with cell coverage in that office and wearing that pink button-down shirt, why don't you start with the preamble? And by the way, just anybody that's on here, Q&A, hit us up on the Q&A with questions, and then you can hit us up on the chat if you want to harass us. Adam.
Gotcha. Well, thanks. So I'll leave all the really good stuff for Jack to talk about, which would be the non-PPP related stuff. So just kidding. I'm not going to hit all of it, but the positive things that have happened this week is that the White House released their own stimulus package, CARES 2, as we're going to call it for today's meeting. So there's the White House CARES 2, and then there's the Senate CARES 2. We haven't, to my knowledge, there hasn't been any details in the White House plan. I don't know if you've seen anything, Jack, or not, but we don't have any details in the White House plan. But what we do know is the dollar amount is like $915 billion. The Senate is $908 billion. So $1 billion there, $1 billion there. We're really close in the dollar amount. They seem to be not able to align on the details, and the two specific details, actually it's three specific details, funding to state and local governments, presumably to cover off on having to do with testing and vaccine distribution and reopening. Democrats want it, Republicans don't. When I say that, that's a broad statement, but that's generally philosophically the position sides. The second is liability protection associated with reopening. Republicans would like there to not be liability, and Democrats, it sounds like, are okay with a pause on liability, but I don't know what the language is, but generally that's the other hang up, is some sort of liability protection for businesses. Then the third area where there's hang up, but it actually was not part of anything released, was direct stimulus checks again. It's like, oh, there's a hang up on direct stimulus checks, but that was no part of the $908 billion in the first place. I don't even know why we call it hang up. So I put that third thing as like well, that'd be great, but that's not even part of the proposal right now. So, because it's not part of the $908 billion. So when it comes to, those specific issues, it's like, look, I mean, how is it we're having a hard time disagreeing on this stuff? I mean, it just, it makes sense to me, at least, not to get political, Gary, so please don't cut my mic. But, obviously, if I cannot spend in a deficit and my revenues are down, and I've got the primary responsibility for distributing all these vaccines and doing all these tests, can you please throw a brother at home? That state funding argument. The other argument is, look, I'm running a safe operation here. I can't tell you that Gary got COVID from walking to my office or not. How are you supposed to prove that one way or the other? So not bogging down courts, which are already backlogged with litigation claims that are unprovable, also kind of seems to make some sense that, if you follow some guidelines, that sign a waiver when I come in. I'm assuming some responsibility, do the right thing. It's like, especially if you're like well, I'm not wearing a mask type of person, and then you walk into my establishment, happy to catch coronavirus and then sue me. That's BS. That doesn't make any sense to me. So I'm having a hard time with understanding, like, how is it that this is what we're disagreeing about? This seems like, well, I don't want mom and apple pie. I like cherry pie instead. And you can cue up the song, Jack. Yeah. I mean, it really does feel like they're disagreeing with mom and apple pie on this. And their deadline is a couple weeks away. So when it comes to the Paycheck Protection Program specifically, which is, really what we've been focused on, a lot of the stuff that we thought would happen is addressed in the Senate package. We can't speak for the White House package. So, the first thing that's in is, second wave of funding. And that's for businesses that can demonstrate a 30% or greater revenue drop sometime in 2020. The second thing is they address the Chamber of Commerce issue, which is not-for-profit organizations that aren't charitable organizations. So as long as you're not a lobbying organization, funds, you cannot get PPP funds. But if you're a traditional chamber of commerce or a civic organization, you can. So that's going to be helpful. And then the next, there's two other big things that I'll talk about that are in here. There is a lot of stuff. And two other big things that I'll talk about is that they fixed the tax deductibility for the business expense side. The reason that I wanted to hit on that one specifically is that I would suspect that the White House proposal probably has a lot of similarities to the first two things that I talked about, but this may be where there's a deviation if the White House version is the version that goes, because it's been Secretary Mnuchin that's been arguing for not having the expenses be deductible. So even the dollar amounts are the same, they're not including this whole tax thing in any sort of a dollar piece because it's not direct checks that people are writing, it's just forgoing revenue. So there's a chance that the $918 billion proposal does not include addressing the tax deductibility piece, whereas the bipartisan Senate agreement absolutely does. It's right here, bullet point number 4 under Paycheck Protection Program. And then this is another really cool one that it looks like they threw in there too. It was the extension of the SBA covering off on loan payments for SBA loans. So I thought that was actually pretty cool as well. So those are the big ones that there's a lot of stuff, but those are the big broad ones that I thought were really neat to see in here. I think the other thing to think about here too, that's it's a little bit misleading in terms of saying, oh my God, we're spending another $1 trillion. Half this money that they've allocated here was already appropriated. They just didn't spend it in the first go round of stimulus because they didn't spend all the PPP money and they didn't spend the Main Street lending program money. So that's where 500 of this 900 billion is coming from. So it's really 400 in new money. So that's my spiel. Jack, if you wanted to take it from there.
Sure. So a couple of just details. When we talk about 908 billion, and then as Adam said, no, plus or minus a couple billion, we're talking about the total package of the CARES Act, version 2, if we want to call it that. And what that means though is about 300 billion of that is allocated to PPP. So, we're kind of mixing and matching a little bit together, understanding that obviously there's lots of money that's going into the PPP program, but there's other things. Adam had mentioned support for state and local governments. There is healthcare provider funding, vaccine development, testing and tracing, education, student loans, nutrition, agriculture, the U.S. Postal Service, and broadband, mental health, liability protections, and those kind of things. My kids actually told me or reminded me yesterday that we're way behind as far as globally with respect to broadband. I'm like, well, I think Adam may be experiencing that at this point in that office, but I think a lot of us are spoiled with high density lines. So that it is true that it's a push and pull. So we've been focusing on the dollar amount in past weeks, but now it's getting down to the details, which is where is the push and the pull. So from one perspective, there's some groups that are saying, well, okay with the stimulus checks, but not at the expense of unemployment benefits or expanding unemployment benefits. So there are these little smaller micro adjustments and discussions going on behind the scenes as to, okay, if I give you this, then you got to give me this. And so it's a battle between, well, let me take another step back. Remember that this, a lot of this is coming from this bipartisan group that was put together out of frustration that they said, hey, people are not getting anything done, so we're going to put this out. So it isn't necessarily the same as what the Senate is putting forward, what the House is putting forward. It's kind of like you have a third racehorse in the race that is putting together their proposal. And so, and in the White House. So you have all of these kind of competing interests rolling in the same direction philosophically, but focusing on different details of the amount and also where it's going to go and what the push and pull is. I think President Biden said maybe last week that this is a down payment of, like, if the Democrats agree to something less than what they wanted originally, that this is a down payment of what may be to come down the road once he is installed as president in January. So those are a couple things to think about. We can talk about more details as to what the numbers are and things like that, but just kind of understand that there is multiple, even now, more additional perspectives and opinions, fingers in the making of the pie, whatever that ends up being. And actually people are constructing different pies and we'll see where we end up going from there. So that's my introductory 2 cents.
Well, we are a lighter attendance than normal, but we still have some questions rolling in, which is good. So I'll start. And so Sharon, thanks for sending these. She's got 2 questions here. The first one is, our head count is nearing 500 people. Once we cross the 500 mark, does that mean we cannot offer FFCRA leave and we are no longer eligible for the payroll tax provisions from the CARES Act? Thoughts?
So I'll go in reverse order to buy Jack time on the Family Medical Leave Act provision. So on the Paycheck Protection Program side, in terms of the new thing that we just discussed, the cap is 300. So presumably you cannot double dip. If, on the other hand, you did receive PPP funds and then for whatever reason you just grew and exceeded the original threshold, I don't see that being I mean, they haven't talked about that at all, but I don't see that being a problem because you took the loan under a certain set of circumstances and then, those circumstances changed. I guess they could try to make an argument that, hey, there were other resources, but we had an interesting case of where that could happen is, if I was 200 some odd people, 200 or 300 some odd people, I'm down. Through the course of being down, I start talking to one of my competitors who's also down, and we decide that with both of us down, maybe if we combine forces, we could actually have a chance of surviving and being stronger. So it's kind of one of those 1 + 1 = 1.5 mergers, but your head count goes up. So technically I still meet the provision of being down 30%, especially in a combined organization, and my head count's up because we're together. That would be a case where I could stand before the court and say, Your Honor, this was still done with the best of intentions in mind versus, hey, I just flat grew and I didn't. In hindsight, we still think it's correct to keep the money, apply forgiveness, even if in hindsight you didn't need the money today. It's just that expect you'll get some questions on your application if you're over the $2 million mark. So I don't see a problem on the PPP side. On the FMLA side of the equation, I just don't remember off the top of my head there being an employee cap on that. I actually thought that was put in place to specifically address places where you couldn't get PPP funding in the first place, which would lead me to believe that there wasn't an employee cap on that. But if Jack hasn't been able to figure it out, I'm sure we can figure it out and get an answer back out.
Well, I think maybe the question is not necessarily the FMLA, but the Families First Coronavirus Relief Act, Coronavirus Relief Act, and with respect to the 500 employees, if I understand the question correctly. And I quite candidly, I've left those discussions up to our employment law professionals to kind of keep us updated on what's going on. But as far as the interaction between crossing over that and having to offer the leave that is contained within that particular act, which interacts with the FMLA, I don't know the answer to that, and I can certainly ask Sharon and find out, but I don't. I can speculate, but I don't want to mislead you with respect to what happens if you go over the mark. And I assume that when you say you're going to go over the mark, you mean as of the end of this month, because I think that provision is from like April to the end of this year. So, I think that maybe starting in January, that it would be, the answer would be different. But again, speculation, Jack theory, I will check on that and find out.
All right, next question from Sharon is, what's the impact on a construction WIP report if we cannot deduct the expenses covered by a PPP loan, hoping that our loans get forgiven? That's the question. And then do we have to change the way we report expenses on the WIP report?
Yeah, I'm going to ask you to rephrase the question or ask the question again, because I'm going to go back to the preceding question.
All right.
Maybe Sharon, if you could maybe clarify the question a little bit, we may be able to get to an answer, but there's really two embedded questions there. One is if I'm over, and I took it from one direction, Jack took it from another direction. Question number one is, if I pass over 500 employees, do I have to offer emergency leave or not? I think that's the direction Jack was coming from. And that is kind of a law type of question that, hey, at the beginning of the pandemic, if I outgrew my way out of having to offer it anymore, can I stop offering it? I don't know, probably, but it is an employment law question. What the direction that I was coming from was around whether you have to offer it or not, being eligible for the tax credit associated with providing it. Since that fell under FMLA, I'm pretty sure that even if you didn't have to provide it, but you did, you could still get the tax credit.
Okay. Sharon adds some specific additional information here. Regarding WIP, a recent seminar from CFMA suggested we may have to reduce costs reported on the WIP if those costs were paid with PPP funds.
That's the stupidest thing that I've ever heard, ever. Because that's just all that really is. I mean, your WIP schedule is completely independent from a government subsidized program. Sorry, if this is Sharon that I'm thinking it is. Didn't mean that to be offensive. If you think about it, the WIP is meant to be, an accurate reflection of the costs associated with running a project, which is completely independent of government stimulus. So everything that GAP has come out with respect to PPP has been associated with making PPP loan forgiveness be an other income item. So the only place that might even have some applicability, and it still wouldn't make any sense to me to do this, would be associated with the reduction in the overhead burden, because that still wouldn't be an accurate representation. It's like all of a sudden, wow, I'm making 80% on my jobs. I'm the best estimator ever. That really isn't the intent of your work schedule. So that wouldn't make any sense to me to adjust on a job by job basis a reduction in the overhead allocation just based on the fact that you got PPP money, because everything the GAP said thus far has said that it's another income item.
And I would say
from a legal books, like you prepare your books.
Yeah, from a legal perspective, I would say have a similar response, which is this is a subsidy of something that exists. It doesn't change the nature of the underlying thing. In this instance, WIP costs. And so from a reporting perspective, it would be, if I were doing a legal document that required disclosure of a snapshot of what was going on, and it was, what are your actual costs incurred or potentially paid by the company, there'd probably be a footnote in that schedule to that asset purchase agreement that says, by the way, this may, this is a cost, but it's subsidized. So it's not, it depends on what question is being asked. Costs actually incurred and paid for by the company versus costs incurred or in process. So it really just depends on the nature of the specific question. And yes, we are splitting hairs, but you kind of have to, depending on who's asking the question.
So
the primary user of your external financial statement in that WIP schedule is going to be your bonding company and your other creditors, and they want to know that you're running good projects. And if you screw up reporting of running good projects with free money, I can't imagine that I can't imagine any bonding company is going to say, oh, we absolutely want to see that reflected on the bonding or on the work in process statement, because it would just screw up their historical tracking of what your traditional margins are, which is how they're underwriting you.
So Adam, you get
too many accountants in the room like you would at CFMA. This is the kind of stuff that happens. It's why we don't go to CFMA. This kind of stuff happens.
Well, and the good news is Karen agrees. She says, I like Adam's interpretation better than CFMA. So
yeah.
All right, that's good. All right, well, Sharon, I'm glad we could address those questions live for you. Any other questions out there from the land of Oz and hope and milk and honey? And if not, we'll be done a little bit early today. Just as a reminder, we will put this thing up on BGW CPA YouTube channel later on today. And I think next week is probably going to be our last one of the year, if I'm not mistaken, because we're going to take off for Christmas break. At least I believe we are. Congress is going to be roasting chestnuts by an open fire and not worrying about anything.
Versus burning in hell.
Yeah. Evidently some of that'll come later for some. So.
Actually, I thought you were going to say roasting chestnuts over the dumpster fire that they started.
I like that one.
That's like Hey, Adam, your HR department, my HR department said I couldn't do these webinars with you anymore.
No, I like that. I think that you should, that's copyright. Now you said it. Look, it's
Chestnuts,
copyrighted.
chestnuts roasting over the dumpster fire. Now,
Oh.
the one, if you don't have any more questions.
No, we do
Do we have
actually.
another question, Gary?
Yeah.
Okay.
Oh, and this one really hits, man, this hits home to me because I've been scammed twice this week by fraudsters on a credit card and also on Craigslist. But this is the question. Still hearing talk about third-party scammers claiming to be working with their bank. Are you guys hearing talk about this happening?
We've seen an announcement from, I think it was Pinnacle Bank. We actually saw an announcement that said, hey, we can help you with this, or your bank has hired us to do this. None of those are true. Like, unless you hear from the person you talk to, or you get something directly from the bank, I wouldn't do anything with a third party, because you're really releasing, part of that is you're releasing some personally identifiable information, both for you and your business, as part of the forgiveness application process. So I just would be very, 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 very leery of getting third-party help from anybody that you don't specifically know or already have a relationship with.
Yeah, definitely. I mean, I'm seeing it in this instance specifically related to PPP and government stimulus and everything else, because there's just so much confusion, and it's, hey, we can help you get through this. And by the way, we need your credit card because we charge a $50 fee, but definitely you're going to get more than that. And I also reiterate a comment I made last week or a couple of weeks ago about there are particular people that are particularly vulnerable, those that are not tech savvy, those that maybe are trusting. I had mentioned the older generation, my parents' generation, but also I've seen alerts from the FBI that have said, beware, this is the latest and greatest, very sophisticated, meaning it looks really legit unless you peel away the layers. Or I think in some cases, as Adam said, just employ some common sense that, go straight to the source and verify and validate, whether it's to your own banker or go at least on the official website. These websites that redirect you and they have the logo and things like that, I just ignore and delete. Yesterday, I answered a phone call because I thought it was from it was an unlisted number. Well, it showed the number, the caller ID, but it looked like a number of someone I was expecting a phone call from, a person who's going to do some work at my house. And it was a scammer. And I put on speakerphone because the kids actually were downstairs from lunch because they're doing at home school for the next 2 weeks. And I said, this is what's typical, and let them listen to it. And I said, here are the things that you should be listening for, which is the broken English. It's obviously a computerized voice. There was a warrant for my arrest, and I did all kinds of bad things, and I need to press 1 to talk to someone live. And I'm like, no, you hang up as soon as you hear the first few words. Don't even listen to it. So yes, that's a long-winded way of saying yes, there's a lot, and they're getting better at it, and they're given material like the confusion. I mean, I would imagine with CARES Part 2 that it's going to continue, and they're going to focus on the things that they know you're vulnerable about, which is those things you have questions about. Am I going to get a check? Can I do this or I do that? Some of the things that we've been answering here. So yes, that is very much in existence, prevalent, and will definitely continue.
Yeah,
That's
and
good.
probably the last thing I'd hit on, Gary, if there aren't any further questions, is just more on the banking relationship side of the equation. That I have been approached by a couple people that have said, hey, I think it's time for us to shop for a new bank. We're really having a rough time getting through a renewal with our existing bank. you know, who's out there? What do you think about, what do you think about this? And, I really have to default back to, the most honest advice that I can give, which is I haven't separated the sales and marketing piece from reality. We haven't had anybody get issued new credits that demonstrated, a revenue downturn in 2020, especially if they had a bad year in 2019 too, or there was any kind of hiccup in 2019. So it just, with that in mind, I mean, don't be, pun intended, don't be banking on it. Meaning that, if your best course of action probably right now is to, try to work it out with whoever you're currently banking with, whatever is going on with the relationship side, or alternatively, do everything in your power to try to wrap up 2020 strong, get your tax return done, have something on record that you can demonstrate. I don't see a whole lot of activity happening towards the tail end of 2020 and even early 2021 without a supporting document on file to kind of prove that you made what you're showing to the bank. And even then, we've really seen a pullback in terms of new credits issued, really going to people that can support it. And by support it, it's good old fashioned, no story. Revenue like this, bottom line looks like this, in the middle of pandemic, worse, it looks like this, not that, trending back up. So, maybe there's stuff that we'll see that'll happen out there in the future. It's just I wouldn't be betting farm on you're going to get new credit issued when you're demonstrating that you got a revenue and bottom line downturn. I really would try to hunker down and ride it out with whoever.
Yeah, speaking of hunkering down, we've got to improve our broadband in our Myrtle Beach office because you're
Sorry.
But I think the gist of it.
And I would say document.
Yeah. Yep.
So between now and next week, Jack, I think there is a creative writing side of you that I've seen, especially in this rock and roll world. And so in the spirit of Christmas, maybe you do take Adam's lead on the roasting chestnuts by the dumpster fire and just run with that a little bit. I think there's something there.
Yeah. That's what we should do. Maybe take all like traditional songs and change it up a little bit and see how creative we can become in telling a story via lyrics of or titles of music. So to create something.
That's right.
For sure. And I think you even sent me a graphic a week or so ago on the naughty list and the nice list or something like that.
It exists, apparently, if you go look, and then I check my kids' names and I show them, and apparently you can file an appeal to the North Pole governmental authority to get back onto the nice list. So if you find your name on there, then you can petition and tell Santa all the wonderful things that you've been doing this past year that maybe supersede all the not so nice things you've been doing this year, and maybe get off of the S list and get back on the good list.
You may have to also spiff and pay in an unmarked bank account the lower court judges to make sure that it does get elevated to the top of the North Pole. So just
don't provide your credit card to if that website. I didn't look into the website, but do not provide your credit card to get on the nice list.
Right.
Yeah. Well, I was really happy to see my name on the nice list. I don't know that it's going to buy me anything this year, but anyway, any other last call for questions on today's Fun and Frivolity PPP webinar? Hearing none, seeing none. Thank you to everybody that jumped on this thing. Thank you for being around. Adam, thank you for putting on a collared shirt. You look fantastic. And Jack, thank you for being on here again. It's always fun with all three of us. So we'll get this thing up later on today. You have a wonderful,
All right.
safe trip back, Adam.
Thank you,
All right,
guys.
thanks, guys.
See y'all.
All right.